Welcome. Let's take a look at a risk event now for the week starting Monday, the 8th of March. We're off now to Daily FX and to Daniela Sabin Hathorn. Danny, welcome. What have you got lined up for us for next week as a tradable event?
Hi, Jerry. So I'm going to be focusing mainly on the ECB rate meeting and data surrounding the euro. So the focus currently, as we've seen this week and last week, is the bond market, and investors are paying attention to what central banks are doing about it. At this point, it's not so much about the level of yields, but the rapid moves we've seen in the last few weeks. And volatility in the bond market is not a good thing. So we've seen the ECB talk about bond yields in the last 2 weeks, but they haven't been very clear about their communication regarding this rise in yields. We've seen members kind of talk about increasing the pace of bonds, but then kind of shy away from that. We've seen some members of the ECB talk about the necessity to control this move, while others are kind of shying away, which is what we're kind of seeing in the US as well. So the European Central Bank actually slowed emergency bond buying last week. The data is slightly skewed because of redemption, but this suggests that policymakers are mostly relying on verbal interventions to kind of stem away from this rise in yields at the moment. So if we look at inflation and retail sales for the Eurozone, the figures aren't good, nor they just suggest that we've got an overheating economy. And one thing that Luis de Guindos, the ECB vice president, said was that we kind of had to determine whether the rise in bond yields had to do with rising inflation trends or other factors. And the fact that the economic data isn't great and isn't signaling that, it kind of plays into the fact that yields are being pushed higher because of a global sell-off in longer-term government bonds originating in the US. And this all has to do with inflation expectations and how the Fed is dealing with that there. So it's definitely coming from an outsourced event for now. For the euro area, higher yields pose a significant problem because returns on sovereign debts are mostly used by banks as a reference point for lending. So the region's recovery is already expected to be slower than normal. We're recovering from this pandemic. So it does put a lot of pressure on the lending system in the Eurozone. That's definitely something that the ECB want to shy off away from in the short term. So hiring costs, increasing hiring borrowing costs can definitely dampen the momentum we've seen in the recovery. So if we look at Euro USD, which is the pair that I'm looking for next week, we see how higher yields have kind of kept the greenback strong. We've got the euro falling here significantly since the beginning of March. And the decision to increase debt purchases would definitely be negative for Euro USD. And a hint of this could come as early as Monday when the Eurozone will publish the bond purchasing for that week. So it's definitely data to look out for Monday for this. Conversely, alternatively, the euro would likely strengthen against the dollar if we don't see talk about bond yields followed by action, or if we don't see ECB President Lagarde talk about this in the conference on Thursday. So next week, it's not only about the meeting on Thursday where we're expecting nothing much in terms of rates or big changes. It's more to do how they kind of talk about this rhetoric about bond yields and how they actually face bond purchases in the next week. And I think definitely the euro has a lot of downside at the moment, especially against the dollar. And this area here around the 118 mark is definitely an area of support that we're looking to. There's not much from now until then, so definitely expect to see some selling pressure focused around this kind of bond yield rhetoric next week.
In terms of a trade setup, what are you doing in terms of the stop loss, for example?
I'd definitely say this area that I've got marked here, the 121.21 area, we've seen the pair, as you can see, try to attempt to push higher at the beginning of March. This was rejected. So for a longer term stop loss, this is definitely an area to look at. If you're looking more short term, anything above 120 is where you can definitely place a stop loss for your short trade.
Danny, thanks so much indeed. Look, it's a pleasure joining us there. Don't forget, we will be live on the IG platform for the European Central Bank interest rate decision on Thursday. That's at 12:45. We'll be live there with Chris Beecham taking a look at a trade of that euro dollar around that event on Thursday. That's Daniela Sabin Hathorn from Daily FX. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.